Picture this. You've spent the last 20 years, 2 full decades, making every single student loan payment on time, every month, rain or shine. You skipped vacations, you drove a used car, you chose the apartment without the nice view, you did everything right. And then the day finally comes. Your remaining student loan balance gets forgiven. You cry, you call your mom, you take a screenshot of the zero balance screen and post it everywhere. And then, 2 months later, you get a letter from the IRS. It says, "Congratulations on your loan forgiveness. You now owe us $10,000. $10,000. You didn't get a bonus, you didn't win the lottery, you literally just had a debt wiped away. And now the government wants a cut of money you never even touched." This is real. This is happening to millions of Americans right now, and almost nobody is talking about it. I'm Professor of Wealth, and today we are uncovering the student loan tax bomb. What it is, who it hits, exactly how much you could owe, and most importantly, the 4 legal moves you can make right now to defuse it before it goes off. Stay with me for the full 20 minutes, because the last 5 minutes, the solution section, could literally save you tens of thousands of dollars. Let's go. Before we get into the numbers, and trust me, the numbers are wild, I want you to meet someone. Her name is Sarah. Sarah is 44 years old. She's a registered nurse in Ohio. She went to college, then nursing school, borrowed $52,000 in federal student loans to do it. She graduated in 2003, got her nursing job, started making payments. She signed up for an income-driven repayment plan, IBR, which capped her monthly payments at a manageable percentage of her income. Smart move, right? That's what financial advisors told millions of people to do. For 20 years, Sarah makes her payments. Some months it's easy, some months it means skipping the dentist. But she does it every month. And her loan servicer sends her updates. She sees the light at the end of the tunnel. In 2026, after 20 years of qualifying payments, her remaining balance gets forgiven. At that point, she still has $49,000 left on the loan. After 20 years of payments, why does she still owe $49,000 after 20 years? Because income-driven payments are based on what you earn, not on what eliminates the balance fastest. Interest compounds, balances balloon. The system is designed this way, but that's okay, because the balance gets forgiven, that's the deal. Or so Sarah thought, because here's what nobody told Sarah when she signed up in 2003. Here's what the loan servicer conveniently left out of every single annual statement. Forgiven loan amounts may be treated as taxable income by the IRS. That $49,000 that disappears from her loan balance, the IRS counts it as income, like she earned $49,000 in bonus pay that year. She never touched a dollar of it, but she has to pay taxes on it. For Sarah, that means an $8,800 tax bill in a single year on top of her regular taxes for money she never received. That's the tax bomb. And Sarah is not alone. There are 43 million Americans holding $1.6 trillion in federal student loan debt. And millions of them are in the same position as Sarah on income-driven repayment plans counting down to forgiveness with absolutely no idea what's coming. Okay, let's talk about exactly what happened, because this isn't a glitch in the system. This is a deliberate policy change that most people missed completely. Here's the timeline. 2021, Congress passed the American Rescue Plan Act. Buried inside it was a crucial provision. It made student loan forgiveness completely tax-free at the federal level. No matter how much debt got forgiven, you wouldn't owe the IRS a single dollar on it. This was huge. Millions of people breathed a sigh of relief. 2025, December 31st. That protection expired quietly, without any national news coverage, without any letters from your loan servicer, without any warning from the Department of Education. 2026, January 1st. Every student loan forgiven from this point forward under income-driven repayment plans, taxable. The IRS counts it as income. The party is over. And here's what makes this even worse. The One Big Beautiful Bill Act, passed in 2025, was supposed to reform the student loan system, and it did make some changes. But when it came to the tax bomb, it only kept 2 types of forgiveness tax-free: death and disability discharge. That's it. Income-driven repayment forgiveness after 20 or 25 years. Taxable. Borrower Defense Forgiveness, taxable. The new 30-year RAP plan forgiveness, taxable. Public Service Loan forgiveness for government and non-profit workers stays tax-free. That's the one exception that matters. We'll come back to that. But for everyone else, for the millions of private sector workers who have been faithfully making income-driven payments for 10, 15, 20 years, the bill has arrived. Now, I know what you might be thinking. You're thinking, well, maybe I won't be forgiven that much. Maybe my number is small. Let me show you the math. The average loan balance for borrowers enrolled in an income-driven repayment plan right now, according to higher education expert Mark Kantrowitz, that number is $57,000. $57,000. If you're a single filer earning $55,000 per year and $57,000 in loans gets forgiven, here's what happens to your taxes. Without forgiveness, you pay roughly $6,400 in federal income tax. With forgiveness, treated as income, your taxable income jumps to $112,000. You now pay approximately $18,500 in federal income tax. That's a $12,100 increase in 1 year for money you never received, and that's just federal taxes. Depending on your state, you may owe state income tax on top of that. Now let me show you an even more extreme case, because this is where it gets truly heartbreaking. Remember the advocacy group Protect Borrowers? They ran the real numbers on a real borrower case. A woman, a single mother, who started making income-driven payments in 2001. By 2026, her balance had grown to $178,000 because of compounding interest over 25 years. When that gets forgiven, her tax bill at the median bachelor's degree salary increases from $8,551 to $53,858. Her effective tax rate goes from 10.66% to over 67%. She spent 25 years doing everything right. And her reward is a $53,000 tax bill. That is not a hypothetical. That is a real calculation run by real policy experts on real numbers. This is the tax bomb, and the fuse, it's already been lit. Before we go any further, I need to make sure you know exactly where you stand, because not everyone is affected the same way. Let me break this down into 4 groups. Group 1, the red zone, high risk. You are in the red zone if you are on an income-driven repayment plan in the private sector. Your plan is IBR, PAYE, or SAVE. You have 5 years or fewer remaining before your forgiveness date. Your projected forgiven balance is over $30,000. If that's you, this video isn't just informative. This video could save you thousands of dollars. Pay very close attention. Group 2, the orange zone, moderate risk. You're here if you borrowed federal loans after July 1st, 2026 and are on the new RAP plan. You have 20 to 30 years before any forgiveness kicks in. You have time to plan, but you absolutely need to start now. Here's the brutal truth about the new RAP plan. Under RAP, forgiveness only comes after 30 years, not 20 or 25 like IBR. And that forgiveness? Also taxable, so you get less favorable forgiveness and you pay taxes on it. We'll get into your options. Group 3, the green zone, you're protected. You are safe if you work for a government or qualifying non-profit and are on track for public service loan forgiveness, or PSLF. PSLF forgiveness remains explicitly tax-free at the federal level by statute. That did not change. You received loan forgiveness due to total and permanent disability. You received forgiveness due to death, though this one probably doesn't feel like a win if you're a teacher, nurse, social worker, or government employee working toward PSLF. You're in the clear on the federal tax bomb. Check your state taxes though, because a few states, like Mississippi, still tax PSLF forgiveness. Group 4, the confused zone most people this is honestly where most people watching this video are. You have student loans, you're on some repayment plan, you haven't really thought about forgiveness yet because it feels far away. Here is your wake-up call. If you don't know exactly what repayment plan you're on, exactly how many years until forgiveness, and exactly what your projected forgiven balance will be, you need to find out today, not next month, not when tax season comes. Today, because the decisions you make in the next few months could literally cost or save you tens of thousands of dollars. Now here's where it gets even more complicated, and I want to be fully honest with you about this. The student loan system right now is in a state of extraordinary chaos. The tracking tool that was previously on studentaid.gov, the one that showed you exactly how many qualifying payments you had made toward forgiveness, the Department of Education removed it earlier this year. It's gone. A CFP quoted in CNBC put it bluntly: a lot of people are very close to their 20 or 25-year mark. Those are the folks who really need to be thinking about how this tax bomb is going to impact them. That CFP's name is Ethan Miller. He runs a firm that specializes specifically in student loans. And the key phrase there is very close, because right now 2,006 million student loan borrowers have already gone into default. 10% of all student loan balances are 90 or more days past due. The system is under enormous strain. This is not a future problem, this is a right now problem. I want to take a moment here, because I think we need to acknowledge something that the financial data doesn't capture. This isn't just about taxes, this is about broken promises. When Sarah signed up for her income-driven repayment plan in 2003, a government program told her, pay what you can afford for 20 years and we'll forgive the rest. She believed that. She built her entire financial life around that. She didn't pay down her mortgage aggressively because she was managing loan payments. She didn't max out her retirement accounts because of those monthly payments. She structured her career, her family budget, her entire financial trajectory around a promise. And now, not because she did anything wrong, not because the rules were always this way, but because of a policy change, she had zero control over she's getting a $10,000 to $53,000 tax bill. The rules changed at the finish line. That is infuriating. And it's okay to feel that way. But here's what I've learned from studying personal finance for over a decade. Anger is a valid emotion, but it's not a financial strategy. The people who will survive this tax bomb are not the people who are the most righteous. They're the people who are the most prepared. So let me give you the tools, because here's the thing that nobody else in this conversation is saying loudly enough. You can defuse this bomb. It requires planning. It requires action. It requires some uncomfortable conversations with a tax professional. But it is absolutely possible to minimize the damage, or in some cases, avoid it almost entirely. Let me show you exactly how. Alright, here are the 4 moves. Real, practical, legal strategies. No gimmicks, just math and planning. Move know your exact forgiveness date right now. This sounds simple. It is not simple right now. The studentaid.gov tracking tool is gone. Your loan servicer may not proactively tell you, but you have legal rights to this information. Here's what you do. Step 1, log into your account at studentaid.gov and download your complete payment history. Step 2, contact your loan servicer directly and ask them, how many qualifying payments do I have toward either forgiveness? Get it in writing, via email or certified letter. Step 3, if your servicer gives you wrong information or stonewalls you, contact the Student Loan Ombudsman through the Consumer Financial Protection Bureau. You have the right to accurate payment tracking. Why does this matter so much? Because if you don't know when the bomb goes off, you can't plan for it. Knowing your forgiveness year is step 1 of everything that follows. Move hack 2, start saving now, the tax sinking fund strategy. This is the most boring. Most powerful move on this list. If you know that your forgiveness is coming in 2, 3, or 5 years, and you know approximately what your taxable forgiveness amount will be, you can start saving for the tax bill right now. Monthly, automatically. Here's the math. Let's say your projected forgiven balance is $50,000 and your forgiveness date is 3 years away. Based on tax brackets, you might owe roughly $10,000 to $15,000 in federal taxes. That's $278 to $417 per month in a dedicated high-yield savings account. Right now, you can find savings accounts paying around 4.5% interest, so your tax fund is actually growing while you build it. $278 a month. That's one less vacation. That's the gym membership you never use. That's the streaming services you actually don't need. It's manageable, but only if you start now. The worst possible outcome is being surprised on April 15th of your forgiveness year with a $10,000 bill you don't have the cash for. Because then the IRS sends you to collections, and you've just traded a student loan debt for an IRS debt which is much harder to escape. Move #3. Consider refinancing, but understand the trade-offs. This one requires careful thought. Because it cuts both ways. If you refinance your federal student loans into a private loan, you lose federal protections income-driven repayment, public service loan forgiveness eligibility, forbearance options. These are serious trade-offs. But here's the other side of the math. If you have a stable income, good credit, and you're not going for self-refinancing to a lower interest rate private loan means you can pay off the balance faster. No balance means no forgiveness. No forgiveness means no tax bomb. According to student loan experts at Ernst & Elfie, refinancing can work especially well if you're earning over $80,000 per year, your remaining balance is under $50. 000, you have a repayment timeline of 5 to 10 years, you are not pursuing FRAFLF in that scenario. Refinancing at a lower rate than your federal loan's interest rate and paying it off aggressively could be cheaper total than 20 more years of income-driven payments plus a tax bomb at the end. But, and this is critical, never refinance if you're pursuing FRAFLF. The moment you refinance into a private loan, your self-eligibility is gone forever. It cannot be undone. This decision is high stakes enough that you should work through the math with a certified student loan professional before pulling the trigger. Move #4. Explore the insolvency exclusion. The rule most people don't know about this is the one that almost no one is talking about, and it could be a genuine lifeline for some borrowers. Under IRS rules, specifically Section 108, if you are insolvent at the time your debt is forgiven, you may be able to exclude some or all of the forgiven amount from taxable income. What does insolvent mean? It means your total debts exceed your total assets at the moment of forgiveness. Example, your loans get forgiven. At that moment, you owe $65,000 in student loans, $15,000 on a car, and $8,000 on credit cards. Total liabilities, $88,000. Your total assets, savings account, car value, retirement account value add up to $60,000. You are insolvent by $28,000. That $28,000 of insolvency shields $28,000 of your forgiven student loan from federal income tax. This is a real, legal, IRS-recognized exclusion. It requires filing IRS Form 982 with your tax return in the year of forgiveness. Now, I'm not saying everyone qualifies, and this absolutely requires working with a qualified tax professional who understands this specific rule. A general tax preparer at a chain service may not even know this exists, but for borrowers who have significant other debts alongside their student loans, which, given that total US household debt just hit $18.8 trillion, is a lot of people, this could dramatically reduce the tax hit. The bottom line? You have options. More than you think. But you have to act. Before I wrap up, I want to zoom out for one moment. Because this isn't just about individual borrowers making smart moves. The student loan tax bomb exists because of a systemic failure at multiple levels. Loan servicers who never adequately warned borrowers about the tax implications of income-driven forgiveness. A Congress that let a critical tax protection expire without renewal or public debate. A Department of Education that removed the very tracking tool borrowers needed to understand their timelines. And a higher education system that normalized $50,000, $100,000, $200,000 in debt for degrees that don't always deliver $200,000 in economic return. To 43 million Americans holding $1. $6 trillion in student debt. They didn't fail the system failed them. But here's what I've always believed about personal finance. You cannot always control the system. You cannot always control the policy. You cannot always control what lawmakers do in Washington. What you can control is your response. And the borrowers who come out of this with the least damage are the ones who treated this information like the emergency it is and took action today. Let me give you your action checklist. Right now, before you close this video, Step 1. Log into studentaid.gov and download your complete payment history today. Step 2. Email or call your loan servicer and ask for your exact qualifying payment count in writing. Step 3. Calculate your projected forgiven balance. Use 25 to 30% as your tax savings estimate. Step 4. Open a dedicated high-yield savings account labeled EOS Fund and set up an automatic monthly transfer. Step 5. If you're within 5 years of forgiveness, book a consultation with a certified student loan professional, not a general accountant. This is specialized enough to require a specialist. Step 6. If you have significant other debts, research the IRS Insolvency Exclusion Form 9A2 with a tax professional. Step 7. If you work for a non-profit or government, verify your self-eligibility immediately and protect it. I know this video was heavy, these are real stakes, real dollars, real families, but you watched it to the end, which means you're exactly the kind of person who actually takes action. And that puts you miles ahead of the 43 million people who still don't know this is coming. If this video gave you clarity, drop a like. It takes 1 second and it helps us reach the people who need this information most. And subscribe, because next week we are covering the #1 move the wealthiest 1% use to legally pay almost no taxes, and it's hiding in plain sight in the tax code. I'm Professor of Wealth. You are now more dangerous with your money than you were 20 minutes ago. Go take action.